Moxima, I think we've got you back up again. We've just been talking about the performance of Northam Platinum. Of course, you've seen that share price up more than 60%. It's very different from what we've seen from the likes of Lonman and Anglo American. So what makes Northam Platinum different?
Hi, Demi. Sorry, actually, this is better now. I was hearing myself echo. But what makes them, it's quite a list of things, but most importantly, one of the most important things is it's really gained composure. I mean, compared to its peers that fell, I mean, they lost a lot of their value when platinum price fell, but Northam has kept going within a range. It also has a very good balance sheet, or a very strong one compared to its peers, which then helps them with their strategic acquisitions, which they are now embarking on. And in fact, they actually growth projects cost less. They require less capital than a lot of the platinum miners. And lastly, and most importantly, is that the wage negotiations are actually over now, as compared to their peers who probably resume those negotiations at a later stage this year.
But Moxima, Northam has warned in its last results that the prices of PGM, or for the PGM industry, we're going to still see that particular sector coming under pressure. But we are still seeing the Northam Platinum share price continue to rise. So what's going on there?
Okay, well, we all know that investors, it's purely sentiment, and investors are finding platinum share prices, or rather metal share prices, quite cheap at these levels. So it's rallying on behind the back of that. And although Northam is seeing a bit of a softer platinum spot, at least anticipating that, it has recovered quite substantially from its lows at 8, from its lows at 8. And they did also kind of announce that they are swinging into profit, with their headline earnings going up by 98 cents, which is compared to last year, which they had a headline loss of 25 cents. So that's probably one thing that will also just drive the price up.
Moxima, I've said in the intro that that share price is up, what, 60% since January. But if you bought the shares about a year ago, your investment, you'd be sitting underwater at the moment. So what is the outlook for that particular company?
Okay, the reason why you probably wouldn't have made much is because Northam is trading in a huge range band. It's been doing that for quite some time, between 55 Rand and 16. What we're seeing now is actually a breakout of a bear trend, which was formed within that range band, which could then push it back up to 55. Now that's the key level. Above that, it will then, end that entire consolidation, and that could push it up to about the 75 Rand mark. So you'd really want to beef up around 55. There is upside momentum, and I've mentioned that it's an outperformer. So at this point, at these current levels, you'd probably want to get into Northam, and then, like I said, beef up around 55 Rand.
Well, there's an opportunity there. Moxima, thank you so much. That was Finweek contributor Moxima Gama. Of course, she was joining us live from our studios in Cape Town. Do stay with us, because when we come back, we'll be joined by a panel of experts. We're going to be talking about the expropriation bill in South Africa. What are the benefits? What are the issues? What do you need to know as a South African? Do stay with us.